Good morning, traders and investors. It is Friday, June 6th. A couple of things to quickly touch on. We've got some crazy fires obviously going on in Canada. And check out this sunset last night. It looked like a giant orange in the sky coming back from my son's baseball team, which was the opposite experience of Ultimate Frisbee. They got absolutely annihilated, but massive sun, lots of smog and smoke, just creating this crazy glow and haze. Anyway, another quick touch on, I am going to be gone for a couple of weeks. I'm heading off to Kilimanjaro with my best buddy, and we're going on an adventure. Just so you know, I have met with our team here, which they pretty much run the show anyways. I just really do the morning videos. So there shouldn't be any other issues there. Brian's going to do our morning videos, which he fills in for me whenever I head out. And he also does the TTI and the ACS midweek reports and videos. So you guys are in good hands either with our strategies here, which we are long the markets. We've hit targets with the SPY, also with the QQQ. Really the only future moves happening here is we're going to see the market push higher, hit our next set of targets, or the market is going to roll over and hit our entry price stop to kick us out. And at that point, we're most likely going to be moving into a cash position until the market resets and gives us a new trigger. In a perfect world, we would see it run up, hit another target or two, and then a trend exit. But at this point, that's pretty much the scenario. So not a whole lot is going to happen. Either we lock in more gains or we just keep the gains we have and get the rest out at an entry price for our positions there. I touched on the sentiment charts here, I think it was yesterday. If we take a look at the sentiment charts, these sentiment charts show us when investors are bullish, when they start to get overly kind of nervous and bearish, and then when there is massive selling in the market and we want to get out. This was where we had a big shift, which if we look over here on our strategy chart, it's also where our strategy said get out, something is changing. So here we are back into the nosebleed territory. Whoops, we're back up into resistance up here. Everybody is getting very bullish. We can see this from our inbox indicator, our comments indicator, all kinds of different things, even search engine, search terms and things. People are getting to a point like over here where the market's likely to start to stall out, might poke a little bit higher. But people are in the mode that this is just buy the dip mentality. They're getting bullish. They're piling into all kinds of aggressive things. And usually the market will roll over and go against them. Just like when everybody is panicking out over here, it's really generally the wrong move because the market's about to scream higher. So we're getting into one of these sentiment extremes. It's just a matter of letting it play out. If you look over here, the market came up. It traded sideways for a couple of months, chopping around, sentiment slowly shifting, money flows shifting, and then we saw a big sell-off. So that's kind of where we are, this giant, you could say V-shaped recovery, you could say dead cat bounce, you could say bear market rally, who knows at this point. But we definitely saw the market and nailed the low in terms of seeing the exhaustion gap down and the big rally. We've taken a chunk of this and really just letting the market work itself out. The big news there yesterday, later in the day, was with Tesla and Trump, or Elon and Trump, and we saw definitely Tesla shares just get hammered. Biggest drop, $380 billion drop valuation. Huge volume. Obviously, people worried that Trump's going to put the hammer down and make it really difficult for Tesla. So investors kind of jumping ship. You don't want to mess with the bull. You might get the horns when somebody else controls the regulations for your industry. So definitely investors are moving out of Tesla. Now, when we look at the 30-minute chart, we've seen it stabilize overnight trading. It's drifting up. I wouldn't be surprised though if there's another bout of selling today. With investors kind of catching on to this and wanting to get out of shares and get nervous. We'll have to see how that unfolds. But this is obviously a news-driven move. It has dropped right down into support. If we look at these, the wick low and the candle low, we're right into these tops, which is support, which is where it has definitely dipped into, and we saw some bargain hunters step back in. You can see here it has gone deep into an oversold territory. Lots of momentum. It actually shifted the moving average down, that big sell-off. So it'll be interesting to see how this unfolds. It did pull the mags down. Yesterday, we saw the Magnificent Seven really just get pulled down. 14% down in Tesla. It does a lot of damage. I think it was 14%. Yeah, so we saw that. Obviously, we've seen Bitcoin moves a lot, like 9 out of 10 days with the NASDAQ. If we take a look at Bitcoin, Bitcoin also took a haircut yesterday, selling off fairly sharply. Again, flagging out here, it is starting to break below the 20-day. Yesterday was a news-driven move. It kind of broke a short-term support level and really kind of collapsed, which can be seen as a washout low potentially. You can see it's quickly recovered it today. So I think we're seeing a little bit of a relationship there with just selling with Tesla and the NASDAQ yesterday pulling Bitcoin down. I touched on this the other day that Bitcoin used to be a free-spirited asset when it wasn't stuck in the financial system in the futures market. And now that it's been wrapped up and grabbed onto by the financial system, it now moves with the ebbs and flows. If the tide is going up in the stock market, Bitcoin's naturally going to want to go up. If the tide's going down, NASDAQ's going down, it's going to want to get pulled down with it. So that's the unfortunate part of it getting kind of sucked into the financial system that way versus being its own thing. So now it will have those. It'll start to have more of the movements with the stock market. And it's just it makes it actually to me more consistent because that's what I track and follow the most is know what the stock market is doing and where money's flowing in or out of it and where it's going to, and there's a good relationship there. Let's take a look at a couple big movers. URA's top of our hot list. We had a trigger about 29 days ago. It's up about 36%. You can see here our entry price has really popped. It's got a tight bull flag. Looks like this wants to keep going. We did get out of this at a 20% gain. And because we are still technically, based on my analysis, in a stage 3 topping phase, and it's about locking in gains, not about trying to, usually most things don't run and keep on going in this market environment. They usually pop. You get a bit of a pivot high, and then you got to get out and it'll roll over. This one has popped and continued to extend, and it's pushing higher. It has a strong bullish chart pattern here still. Another one was SILJ generated a trigger about 11 days ago. It's up about 20%, really popping in the last 4 sessions, having a pretty big move up. It's getting lots of traction here. It is poking to some new highs. It didn't quite close. Yeah, it did close at some new multi-month highs and showing signs of life. It's same with, I think we saw GDX and GDXJ. We're seeing gold miners outperforming, pushing up to new multi-month highs, leading gold, which is a pretty good sign. If we go and take a look at gold, gold had a little bit of volatility yesterday, but overall gold is creating a launch pad here. We've got a little bit of a 3-wave correction. It's got a bull flag, another bull flag. I think there's a lot of uncertainty, and gold can easily push higher. And the fact that miners are already popping and running is usually a good sign. This is what we used to see, and we see in certain market conditions. Miners will pop first, and then gold is kind of the slower slug, and then kind of moves up after. Gold, I think, has had that big move leading the way, and now we're starting to see people move into the aggressive side of precious metal space, which are the miners and silver. And again, that still goes to the side where typically right near a major market top, people move into the most volatile stuff. They want to make the most money. And so silver and miners are that, and they can warn us that we are getting even closer to economic reset and things like that. But again, they're all in a strong uptrend, so do not bet against them. I feel like a major top is coming in the precious metal space, but it is not here yet, and we just have to let it play out. Another one here is the industrial space. If we take a look at XLI, industrial, zoom out a bit, it's pushing way up here. Typically, industrials come to life and do really well just before a major market reset, which we have here on our cycle chart. We haven't talked about it in a while. Let's just go down here. We usually see gold lead the way, which it has been. Energy stocks were leading the way a long time ago. They had been going up. Even though oil had been going down for years, energy stocks had been pushing up near all-time highs. And so that was an early warning sign. Oil's now kind of broken down, or energy stocks. Gold is still holding up, and precious metals are starting to shine across the board, gold, silver, and miners. Industrials are trading up near the highs as well and holding their ground. And we're starting to see that. Usually this happens right near a major market top. And businesses are they're getting bullish again. They're starting to focus on expanding and getting ready for the next bull market, the next big wave of growth, upgrading equipment, all of that stuff. We're starting to get that again. And overall, it's generally a pretty bleak outlook after that. When the market rolls over, we go into a recession, they realize they just spent millions on new equipment and sales are half of what they were, or a quarter what they were. And then things get pretty ugly. But so overall, this is another warning sign that people generally in factories and stuff are bullish, thinking things are going to start a new upswing, not realizing the cycle that they're going through is way bigger than they thought. We're probably going to go through a year or two of downswing, and hope and pray they can survive. We did have a member talk about Russell 2000, wondering the small caps putting in an inverse head and shoulder and what to expect there. I think the inverse head and shoulder we're probably talking about is this here. We got the head, we got a shoulder, we've got a neckline right across here. It could be. It definitely has that kind of pattern that we'll see how this unfolds. A lot of charts have this pattern, including I think the Mag 7s, a lot of the Mag stocks themselves, which is why they has the same pattern. So the big question is we've got a pop, pause, pop, pause, pop, pause. The big question is, are we going to see this have another shoot higher? Which in a perfect world, I would like to see stocks have one more push higher so we can hit more targets, lock in some really nice gains with our index plays before it starts to roll over. But if it does stall out here, I mean, I think we're going to see very precipitous drop. So we're at that turning point. We're just in a free trade right now. We've locked in gains. Doesn't matter what happens. The Russell 2000 does have this little bit of a potential bottoming formation, inverse head and shoulders that could pop and push it a little bit higher. Last but not least, somebody wanted to touch on the dividend space. If we take a look at the Dividend ETF, SPYD, which are the S&P 500 high dividend paying funds, they do have a pretty ugly looking chart. Obviously, we got a drop, we've got a bear flag, we've got a drop, another kind of bear flag, more or less a series of lower highs, series of lower lows. I mean, this does look like it could drop at any point here. Maybe it wants to push out or hang sideways before going off a cliff, but overall doesn't look the greatest in terms of distribution selling. You see a big bout of people moving out of dividend stocks, moving to cash, and then it kind of halts for a while, and then another big flood of people moving out. Not a good sign. Now, this is built with, there's a lot of different stocks in here, but if we take a look at a couple leaders here, we got like XLE, the energy space does pay some pretty good dividends. It's obviously broken down through support. It has a very similar type of price action, which is why I think we see the dividend space move that way. Another one is IYR, which is real estate. REITs pay pretty good pricing, and of course they have been in a downtrend series of lower highs, lower lows for a long time, and kind of topped out and then kind of broke down and then put in this bearish pattern, another breakdown. So I think we're very close here to another precipitous drop. But overall, the market sentiment, as I mentioned yesterday, is very strong. People, when I say strong, I mean people are frustrated. People who have missed the bounce and the rally and the V-shape, now they think the market's going a whole lot higher. They're moving into a lot of the aggressive stocks, which if we look over here, uranium, silver miners, blockchain, ARK ETFs, semiconductors, copper miners, clean tech, all that stuff. So we definitely have people moving into more aggressive plays. And the sentiment is strong that they're frustrated and they're angry and they're getting bullish. And that's what our sentiment chart over here points to. These deep green, people are getting very bullish, and we're right up into resistance. So something big is going to happen. This is typically what happens. I track a lot of different metrics beyond the stock market. I've kind of mentioned, when it gets into search engine and website traffic and YouTube videos and all of that stuff, we can track what's going on. And we are at a really critical turning point. The stock market is about to scream higher, or it is about to top out and have a precipitous fall. So it's just a matter of letting it do what it's going to do. Whatever happens, happens, and we're in position and have a strategy for either direction. So it doesn't really matter for us. It's just a matter of waiting, putting in the time, letting the market do what it's going to do. We have to let these waves roll through. We can't force them. We can't jump in front of them and try and front run a move. Usually you'll get hurt that way. So let the move and the wave come, hop on it as it's forming and moving, but don't jump off it before or try to jump on a new wave that's not quite here yet. Anyways, that's it for now. Talk to you soon. Bye-bye.